Mark FABER, the editor and publisher of the Gloom, Boom, and Doom report, has said in the past month that equities could fall 20% from their recent highs. And he's joining us right now on the phone from Thailand. Mr. FABER, always good to talk to you. I know you're growing increasingly concerned these days. What motivates that concern?
Well, first of all, I'm surprised that on the re-election of Mr. Obama, the S&P is only down like 30 points. I would have thought that the market on his re-election should be down at least 50%. But not that 50%. I would think that yes, I think Mr. Obama is a disaster for business, is a disaster for the United States. Not that Mr. Romney would be much better, but I think the Republicans, they understand the problem of excessive debt better than Mr. Obama, who basically doesn't care about piling up debts. And you also have in the background Mr. Bernanke, that with artificially low interest rates enables the debt to essentially escalate endlessly.
So, Mark, you've said previously that you anticipate a 20% reduction in the levels we're looking at now in the equities markets between now and year-end. Is that correct? Year-end, do I have that right?
I didn't put the timeline. Okay. I said from the recent highs, the market would drop, say, the recent highs were 1474 on September 14th, that from that high the market would drop over the next 6 to 9 months by at least, and I'm saying at least 20%.
But 20%, Mark, that is a staggering amount of lost wealth. You're talking about an entire market, not just stocks. Where do you come up with 20%? Well, in my book, 20%
is a minor move. A big move in my book is 50% on the downside or 100% on the upside. 20% is really nothing.
So do you actually change that calculation as a result of President Obama getting another 4 years? Is it going to be worse in your opinion?
Well, you see, you have offsetting factors. I think the problem with Mr. Obama is you get more regulation and it's a disincentive for businessmen to hire people. You also get probably higher taxes. So in terms of economy, he's very negative in my view. But you still have Mr. Bernanke, and you still have, because of money printing, essentially very high corporate earnings. They are now coming down, but they are still at an elevated level. So you have money printing supporting the market. On the other hand, you have an economic slowdown globally, which will affect earnings negatively. But it's difficult to tell where the market will go because we have so much manipulation. But as I said, I think minimum will drop 20%.
Mark, we just heard Speaker Boehner addressing Congress and offering some very conciliatory words. If they were somehow able to solve this fiscal cliff, is there any chance that your negative view gets somehow tempered?
I'm sure they will solve it. They'll increase cosmetically some taxes, and they'll cut cosmetically some spending, and it will all be backloaded 10 years from now. So in reality, not much will happen. But the market tends to rally towards year-end, and I think from, say, a low of around 1360, we could have a trading rally into January, but I think sometimes next year will be again lower.
Do you anticipate a recession in 2013 here in the U.S., Mark?
Yes, I think if the figures were compiled properly, in other words, if the nominal GDP was adjusted by a proper price deflator, we would probably already be in recession.
Already?
Yes.
And we're heading there in the first quarter of this year?
Yes, but I'd like to point out one thing about an economy. GDP is not a very relevant figure, and it consists of many different sectors of the economy. So you can have some sectors that are improving, like housing, and other sectors that are worsening.
Mark, I'm curious, you are long the dollar in part because you think the euro is so bad. What else are you doing right now with your money?
Yes, I mean, this is the choice in life. You choose what is less bad. I personally don't particularly like Mr. Obama, but I happen to think that he's probably less bad for the world than Mr. Romney. It's actually a tragedy of life that both candidates couldn't lose the election. They would have deserved both to lose.
Mark, I'm curious, you said that you're surprised the market didn't drop 50% as a result of President Obama's re-election. What might it have dropped if Governor Romney had been elected?
Well, I'm joking. But basically, I don't think the market has gone down a lot. 2% decline, 30 points on the S&P. People forget, this market was at 666 on the S&P in March 2009. A year ago, we were at 1,074 on October 4th, 2011. We had a huge bull market, and then the market drops 2% and people think it's a disaster. I think it's very normal.
We'll talk about other corrections. Copper is down 10% in the past month. You're in Thailand, so you have a bird's eye view on China. Can you talk about what's happening right now in Asia?
Well, copper is down 10% and Apple is down 20%. I mean, there are lots of stocks that are down 20, 30, 40% from the highs. The Chinese economy, in my opinion, is growing at the present time at maximum, and I repeat, maximum 4%. And that is, in my view, still quite an optimistic observation. I think in Asia we don't have kind of a real recession the way recessions look like, with unemployment going up and so forth. But we're off the peak of business activity 9 months ago. So technically speaking, if you measure the peak of business activity 9 months ago and today, we are at the lower level of economic activity. That means technically we are already in a recession. But it still looks like kind of a boom.
So what do you do right now? How do people protect themselves and their assets, Mark? What's your advice?
Well, I think they should buy themselves a gun, a machine gun.
No, honestly, Mark, what do you do? I mean, come on. What do you do to protect the money? You've got hundreds of millions under management. You can't protect it with a gun. What are you actually doing?
Yes, that's why I said I need to buy a tank.
A tank. I love that. No, but really, no, Mark, what do we do?
But joke aside, look, we have manipulated markets. Whenever you manipulate the market, you will get unintended consequences. I think the re-election of Mr. Obama is an unintended consequence of money printing that favored essentially the so-called, I wouldn't even call them 1%, the so-called 0.25%. But it was easy for the Democrats to attack the wealthy fat cats of Wall Street, the elites, and the privileged people, and to portray them as a profiteer of the system, which to some extent they are. Not because they wanted to, but Mr. Bernanke enabled them to be profiteers. Now, we have a situation where you have today Mr. Obama. I doubt he will stay at the presidency for another 4 years. I think there'll be so many scandals. But anyway, that's another story.
Whoa. Well, why do you think that President Obama wouldn't make it 4 more years?
Well, I mean, you know, there is so much smoke that I suppose there is some fire. And I just doubt that. That's my observation. But we don't know how the world will look in 5 years' time. I'm pretty sure central banks will continue to print money, and the standards of living for people in the Western world not just in America, will continue to decline because the cost of living increases will exceed essentially income gains. And the cost of living will also go up because all kinds of taxes will be increased, like Proposition 30 today in California is, of course, negative for the Californian economy. So that is the status of the world. We have worsening economic conditions, but we have money printing.
So much for that boom, Mark. I'm hearing lots of gloom and doom in your future. Looks like we need to buckle up. It could be a rough 4 years. Mark FABER, editor and publisher of the Gloom, Boom, and Doom Report. Our thanks to you joining us.